Hey, it's Kevin the Credit Crusher here, and today we are giving you another tip. Today we're talking about business credit, and specifically we're talking about business bank accounts and how to use them, move money through them, and use them to leverage credit later on in the business credit building process. So we're going to talk about what types of business accounts to open. Then we'll talk about how to move money through those accounts. We'll talk about some of the problems that you're going to have or some of the caveats for each account. And then we'll talk about how to use them to leverage credit at the end of the business credit building process. First, we'll start with the types of business bank accounts. So let's be clear. You want to make sure if you have a business and you're building business credit that you have a business bank account, at least one of them. We're going to suggest 3, and I'll tell you about those 3 in just a moment. But we definitely suggest you have at least one of them, and they need to be separate from your personal account. Do not use a personal account to do business finances. One, because those things need to be separate for your taxes, but on top of that, you want to make sure that you can access business credit, and having separate business expenses and business revenue from personal expenses and personal income is going to be a crucial point of getting access to capital. So let's talk about the types of credit accounts or business bank accounts we suggest. These are only suggestions. They are not mandatory. There's no rule of thumb. We just suggest these, and I'll tell you why as we go through the conversation. First business bank account we'd like you to have is a major bank, an account in a major bank. A bank like Wells Fargo or PNC or TD Bank, not to be endorsing, but those are major banks. The reason we suggest that you have a major bank account is, one, because it's going to have many locations throughout the United States, or at least throughout the region that you're living in. And if you collect money from out of state, you don't want to have to travel back to your state to deposit that money, whether you're getting cash or checks, money orders, so forth and so on. I know we're in a digital economy now and most money is moved digitally, but some people still collect cash, some people still collect checks. And if you collect a check, specifically if you're collecting a large amount, you don't want to have to try to drive back to the state that you opened your business bank account in to deposit that money. So get a major bank account. In addition to having many locations, it's also going to have Fdic insurance. Most major banks have Fdic insurance. So if something happens to the bank, you don't lose your money or you don't lose all of your money, depending on how much you deposited. So get a major bank first. Next, get a credit union account. Credit unions are very friendly. They're easy to open, but get a business account at a credit union. The reason we suggest a credit union is because it is going to have less stringent lending terms than a major bank is going to have, and is going to be more friendly to the users. Now, one of the caveats about a major bank or credit union is that the credit union, one, may not be Fdic insured. Some are, some aren't, so make sure you check. And some of them don't allow for business bank accounts. So you may have a personal account at a credit union, but it may not allow you to have a business account. So just check before you try to open an account. Obviously, you're going to ask, do you allow for business banking accounts? And if they say yes, then open a business bank account at a credit union in addition to a major bank. One of the caveats about major banking, I didn't say this before, but one of the caveats about major banking is that major banking has much more stringent lending guidelines. So when it's time to get major funding for your business, you're going to have to jump through more hoops with a major bank than you will have to with a credit union. So get a major bank, then get a credit union account, a business account at a credit union. And the final bank is a community bank or a local bank. A community bank is any bank that does not exist outside of the community that you're living in or working in. They don't go across state boundaries. Typically, they don't even go across the boundaries in the community. So find a bank that only exists in your community or only exists in a small area of the state that you're living or the city that you're living in. That's a local bank. And again, less stringent guidelines. So they're just like the credit union in that regard. They have less stringent guidelines, and they treat their customers with a much more friendly service. So get those 3 banks: a major bank, credit union, and a community bank. Now, once you've gotten all 3 of those bank accounts, we're going to give you a suggestion on how to move money. Again, these are only suggestions. So the major bank, that's where you'll deposit all of your business revenue. So if you got $1,000, you'll deposit the $1,000 into your major bank. And then you're going to take the first 25%, again, suggestion, first 25% of that $1,000, and you're going to move it into your personal bank account. Always pay yourself first. We're going to hammer that point home. Always pay yourself first. So you'll move the first 25% of that $1,000 or $250 into your personal bank account. The next 25% of that $1,000 or the next $250, move that into the credit union savings account for your business. That is going to be money that you use when your business has an emergency, like you can't make payroll, or there's some things that need to be fixed in your in the building that you're in, or you have a tax liability that has to be paid immediately. That's the money that you use, but it's only for business emergencies, not for personal emergencies. So if you have a water heater break in your home, your personal home, do not use your business savings money to fix that. That has to come out of your personal money. But your business savings is for emergencies in your business. All right. So that's the second 25%, or the next $250. The third 25% is going to go into that local bank or community bank, and that is for operating expenses. That's where you're going to pay your payroll out of. That's where you'll pay for your all of your monthly expenses for your business. Again, for your business, not for yourself, but for your business. That's where you're going to get inventory from. All of the expenses of the business come from that 25%, that third 25%. Okay. And then the last and final 25% will stay in the major bank. Remember, you put all of your money in the major bank. The last 25% you're going to leave in that major bank, and that is for taxes. All businesses have to pay taxes. Don't get caught with a tax liability that you can't pay. If you have to pay taxes, you'll pay it out of that 25%, right? So all of your revenue is broken down 25%. And the reason I did 25% is just because it's easy to calculate. If you have to adjust those percentages, it's no problem. But you want to make sure, if you are putting money away, our suggestion is 1, 3 banks, 2, put them in that order. First 25% goes to your personal, second 25% goes to your business savings in the credit union, third 25% goes to your local bank for business expenses or operating expenses, and the last 25% stays in the major bank, and that goes to pay your taxes when it's time. Okay, now you also want to have a relationship with the bankers at each one of those institutions. So my suggestion is you go in, and every month, or at minimum every quarter, you call your banker, ask them a question, just a trivial question, or maybe you have a legitimate question about some of the products that they have, or call them to say hello, send them a card. Always be in communication with your bankers at all of those banks. Whomever helped you open the business bank accounts at the banks, that's who you want to contact. Keep reaching out to them regularly. Like I said, at minimum every quarter, but certainly monthly. But you want to reach out to them because you want to be at top of mind when it's time to go for lending. Doing so is going to make the lending process easier. And by the way, if you have all 3 banks, you have at minimum 3 options when it's time for lending. So after you've built your full credit profile, now you want to go for major lending. Let's say you want to go for $100,000, an injection of capital into your business. You can go to each one of those banks, And now that you have moved money through them and you have established and maintained a relationship with the bankers there, you can walk in and say, hey, I'm ready to get $100,000. And maybe you'll have to get 50 from the major bank, another 25 from the credit union, and another 25 from the local bank. That's going to make up the whole 100,000. The reason I suggest that you have 3 different banks is because, again, 3 options, number 1, but number 2, major banks have much more stringent lending guidelines. So when you go to them, they're going to just strictly look at numbers. They're going to be looking at your profit and loss statement, your bank statements, your taxes. That's how they base their lending. The credit unions and the local banks have a much more personable experience with regards to lending, and that's why you want to have those. And so you can go in and say, hey, you know, I've moved $25,000 through these accounts. Can I get a loan? And because you've had this relationship, they are much more likely to lend with you, and they may not require taxes, or they may not require as many years, and they may require bank statements or may not require any bank statements, but they have all that information, and so they can look in and you won't have to go collect that information. So I suggest those 3 banks. I suggest you have a relationship. The way I suggest moving money, all of these only suggestions, but it'll help you in the process at the end get access to capital, and it'll be much easier to do. All right, that is business banking. That is part of the business credit building process, and it's a crucial part because those are the places that you're going to go to get the lending that we're talking about. Stay tuned until next time when I give you another credit tip.